ICT is overcomplicated, and yes, all of these strategies can make you a profitable trader, and they have for many people, but many traders are left confused with many concepts, making markets harder for them to read. But what if I told you guys there is one simple ICT bread and butter strategy that will make you profitable? Now, guys, this strategy is simpler than you may think. So, in today's video, I'll be going over how you can use fair value gaps to become profitable. I will be going over many gems in today's video, so make sure you guys watch the video towards the end. So, let's get into it. Now, I'm sure most of you are up to date with what makes a fair value gap valid. We need 3 consecutive candles where there may be 3 consecutive bearish candles or 3 consecutive bullish candles, and the gap in between is our fair value gap, and we usually enter at the 50% mark, as in most cases market will come and fill our 50% of our fair value gap. So with that in mind, I'm going to outline a few concepts for you guys which will be very useful in today's strategies. Alright guys, I'm going to go over 2 concepts which no one else is talking about. This will teach you what price action is trying to tell you in reality. So let's get into it. So I'm going to show you guys what fair value gaps are trying to tell you if they are respected, and what fair value gaps are telling you if they are not respected. So firstly, if fair value gaps are respected, we should get a continuation ideally, with market expanding higher or lower depending on the direction. So we'd like to see a continuation with market forming more fair value gaps off the initial fair value gap plus breakout structure. So if the fair value gap fails, however, market will look to take liquidity against the fair value gap. So let me show you guys on the market. As you guys can see here, we have a fair value gap right here, which market plays beautifully in, which we then get a continuation where market expands, and we do get another fair value gap right here. So now you can go find this fair value gap on the 4 hour, which will be to around here. So as you guys can see, we do form another fair value gap right here, which market does tap into beautifully, and we do get another continuation. However, if you guys do look here, you guys can see we do have a fair value gap which is not respected. So once this fair value gap you see is not respected, you should be telling yourself, what is market looking to do? Market is always doing 2 things in the market. Market is either rebalancing inefficiency, or market is looking to take liquidity. So what points of liquidity do we have? We have this swing low right here, which market is aiming to take. Why is this? If you read price action, once market does not respect this fair value gap, we are looking to take market even lower to take this liquidity. As I said earlier, guys, market is always looking to take liquidity. So this is a key sign, and it's a key concept that you should keep in mind for this strategy. Now, as for continuations, once you get a continuation and you have another fair value gap form of it, this we can presume market will continue even further. So now this is constantly happening. If I drop down to the 4 hour, as you guys can see with this price range where we had this fair value gap, as you guys can see from here, from once we've had this fair value gap fail, we can now assume that all fair value gaps will fail until market sweeps liquidity. So if I show you guys, if we have a fair value gap here, this has failed. If we have another fair value gap here, this will also fail. As if one fair value gap fails, we can assume all fair value gaps under or above it will fail, as market is looking to take liquidity. So we do end up taking liquidity right here. We also end up taking this low right here. So if a fair value gap fails, market is looking to take liquidity. This is constantly happening on each time frame. Now, ICT does say time is fractal, meaning any patterns, trades, strategies we can see on the 1 minute time frame should also work on the monthly time frame. So even though I'm using the 4 hour and the daily, this should work on the 1 minute, 5 minute, 15 minute, whatever. Now, market is always looking to either take liquidity or rebalance inefficiency, rebalance imbalances, FVGs, whatever you want to call them. They're all the same thing. Now, this is happening constantly in the market. It's a 24-hour cycle, 5 days a week on any time frame. Now, the next concept I want to share with you guys is that the high or low of candle C should not have body closure below or above candle B. Now, you guys know earlier in the video, I told you guys about how we need 3 consecutive candles to form a fair value gap. We have candle A, candle B, candle C. Now, as you guys can see here, we have the body and the wick of candle C. So we do not want the body to close below the low of candle B. So as you guys can see here, we have the low of candle B, and candle C completely closes below this low right here. We don't want to see candle C displacing through the low or the high of candle B. Now, as you guys can see here, we have candle B and we have candle C with the body of the candle displacing through the low of candle B. This shows us this fair value gap is likely to return back to this fair value gap immediately. And if we do return, we would not take this fair value gap as a strong fair value gap, as market may just be returning to come swipe this liquidity here. So this is how we can frame our drawn liquidity. And as you guys can see here, candle A, candle B, candle C, the body of candle C does not close above candle B. This shows us market is not just trying to move up and then return and take out liquidity. This shows us market wants to return back to this fair value gap. So this would be a valid fair value gap to take, and this is one we could long off in this specific scenario. Understanding liquidity and drawn liquidity is so key for this strategy, guys. Understanding how fair value gaps tell a story. Each fair value gap tells a story. Simply from body closure above or below the wick, we can frame our bias. It is that simple. Now, some of you may be asking yourselves, why was this FVG effective? This FVG was effective. However, this fair value gap was not effective, as you guys can see right here. Firstly, as you guys can see, we do not have candle C displacing through candle B. So we do get a good reaction, market pushes up. Another fair value gap. As you can see here, candle A, candle B, candle C. Candle C does not displace through the high of candle B. However, in the third fair value gap, as you guys can see, candle A, candle B, and candle C. Candle C absolutely smashes through price up here, taking out the high. We get a huge displacement to the upside above the high of candle B. Now, this just shows us that market is unlikely, firstly, to return back to this fair value gap. However, if we do return back to this fair value gap, it just shows us market is coming back to take liquidity rather than to rebalance inefficiencies. So the hardest part about trading ICT is finding your bias. Now, with our draw of liquidity, we know what market is attracted to. Market is always attracted to liquidity. Wherever the liquidity is where market will want to move. So as you guys can see here, we do have equal highs right here, which market would want to take out. And as you guys can see, using all our concepts together, as you guys can see, we have a fair value gap right here, which market absolutely does not respect, as you guys can see. However, on the other hand, we can see market respecting our bullish fair value gaps. Market is moving upwards slowly, as you guys can see. Now, market plays off this fair value gap and we get a push upwards. So now from this small fair value gap, we formed another fair value gap, which is what fair value gaps are meant to do. This is expansion. This is market continuing. This is our continuation, as I've talked about. So from one fair value gap, we get market continue and create another fair value gap. Market is displacing upwards as it should be doing. So from here, we do take out our liquidity as market would want to do, which market is attracted to. So this all leads us down to our strategy. How can we use this to our advantage? Now, you guys are probably putting all these concepts together in your head, and I hope you see where I'm going with this. You guys can see once you form your bias, it is very easy to catch in on the trend and catch these large moves. So I'm going to show you guys a couple examples on the market so you guys can further understand even better and show you guys how you can implement these concepts into your real live market. So let's get into it. Now, using all the concepts I've taught you, I'm going to show you how really amazing the strategy is and how well it works. So to start off, I'm going to clarify two things from 8:30 to 1 p.m. So 8:30 a.m. all the way to 1 p.m. EST time, so New York time, EST -4. This is our trading window. This is the only time I recommend you guys place trades for this strategy. So as for time frame, we are only going to be entering off the M5. So 5-minute time frame is the only time frame we will enter off. Now I'll delve into a couple of examples and show you guys it in full figure. So let's go. Now, starting off with our first example, as you can see, I am on EURUSD on the daily time frame, and you guys can see market is overall respecting bearish fair value gaps. Generally, we are respecting bearish fair value gaps better. As you guys can see, we are pushing off them. As you guys can see, now we do get a slight impulse upwards, and now I presume market is going to be looking for this draw of liquidity. So this is my bias on the market, and as you guys can see on the daily time frame, we do leave behind a lovely fair value gap. So I'm going to look for this fair value gap to be respected so I can catch the continuation all the way down. So now we do have a fair value gap which is valid, as you guys can see. This candle does not disclose below the low of candle B, showing us market does in fact want to return to this fair value gap, so we can in fact trade off it. Now, if this candle were to displace far beyond candle B, we would know that market is trying to run away, and if market were to return to this fair value gap, we would be aiming to take out this high or this high. So now, if I do drop down to a lower time frame, such as the 15-minute, just to play out market for you guys, to where we do get a tap into our fair value gap. Now, if I drop down to the 5-minute, as we only enter off our 5-minute for this strategy, so we want to see some sort of liquidity sweep into our fair value gap. Now, what do I see? We have a very, very nice area of liquidity right here. As you can see, market is consolidating quite frequently. We do get relative highs here, which market does take out. As you guys can see, we do take out quite a couple of key levels of liquidity, as you guys can see. Now, we even do take out this high right here, which is quite a major high in the market. So now, all we are looking for is a market structure shift. Once we've gotten that liquidity sweep or some sort of sweep up into our fair value gap, we just want to wait for the first market structure shift to enter off. So, as you guys can see, market does take out liquidity again in the form of equal highs, relative highs, whatever you want to call it. Now, as you guys can see, we do very, very clearly get our market structure shift. So from here, as you guys can see, this could be our market structure shift, or you could even mark out this candle if you'd like. However, this is completely valid, so let me just mark it out. Market structure shift. As soon as the candle closes, that is when you want to enter. You want to enter your sell order, stop loss above the swing high at 8 pips. So as soon as the candle closes, you enter on the closure of the candle. So as for your take profit, you just simply want to target opposing liquidity. So we're going to target this low right here. And now, if I end up playing market, you guys can see, you do catch this continuation beautifully with no drawdown, leading to an overall amazing trade for about 3 risk to reward ratio, so which is absolutely amazing. On to our next example. I'm going to show you guys what you should do when market does not respect a fair value gap, as in this trade. Now, on the 4-hour time frame, we can see market is moving up, bullish, all the way up. We are working towards this high. So market is working towards this level of liquidity, so we can assume market will just move bearish more. So from here, we do get a lovely fair value gap, which is in fact valid, as you guys can see. However, when we do play it out, you guys can see the fair value gap is not respected. As you can see, firstly, market shoots upwards. So let me just replay that a little bit. Let me hop down to the 5-minute time frame for you guys. Now, as you guys can see, market does end up not respecting this fair value gap. We do get market move down a little bit. However, overall, you can see market is not really respecting this fair value gap. So in the end, we do end up getting our market structure shift. Before that, we do get a liquidity sweep into this zone, as you guys can see. From here, where we do take out many major lows, such as this low right here and this low right here. So as you can see, market runs on these lows, takes out this liquidity and quickly reverses. So if I do end up playing market, as you guys can see, we do get a market structure shift right here. And all a market structure shift is it indicates a reversal in the market. A market structure shift is a reversal pattern. So as you guys can see, we do get a change in trend from market moving downwards to market now moving upwards. So from here, as soon as we get this closure candle that displaces above this high, we simply want to long the market now. From here, we are going to place our stop loss below this low right here, as it is quite a big stop loss. So we are giving our trade room to play around in. As for take profit, guys, simply place your take profit at the high right here. Now, if I do play out market, as you can see, we do end up getting a little bit of drawdown. However, if I do play out market, we do end up taking profit. So let me just speed this forward for you guys. Now, as you guys can see, we do end up taking full take profit and a little bit more. You could have also entered off the fair value gap, which was left right here. However, just to keep the strategy consistent, I recommend you guys enter off your market structure shift. So I do recommend you guys backtest the strategy for yourself, just so you guys can find out how effective it really is and how amazing the strategy really is. Thank you guys so much for watching. And if you are not a funded trader yet, make sure you guys check the link in the description so you guys can get funded 100% guaranteed. We also do offer account management once you are funded. So make sure you join the Telegram in the description at Pass My Challenge. And thank you guys so much for watching.